Hey traders, Nick Shaheen here. I need to do a little video because market makers are causing havoc in the markets in the last couple of days, and it was easy to game them and beat them at their own game if I knew levels, volume profiles, and what price levels really matter and what doesn't matter. So I'm going to use the S&P ES, which is the futures contract, and Apple. So let's switch to that. Let me see here. So today is Friday the 13th, boop. And the market was kind of iffy in the morning, and then it's still flat on the S&P because we had a massive Apple headline, which is total BS. I want to curse, but I'm not going to. But anyway, some Goldman Sachs analysts called it a short, basically, down to 165 or whatever it is. So based on an accounting issue. Well, here's my thought. If Apple is having accounting issues, we should just shut down Wall Street and just move. We don't need to trade them. All right, so I'm not saying we're going to the moon. This is the small caps. No Apple here. It's green. They're off their highs. They came out of the gates smoking. But if I look left, this was a spot to exit longs, which I did. I've shared bullish patterns, and then I trimmed, and today I exited my longs in the IWM, and I rolled into the S&P with some profit. So I'm basically playing with house money. But this is not a hey, I won type of a deal. This is to show what not to do. And let's go back to the S&P, and I'll see if I can prove it in here. I'm going to go to a 5-minute chart. So this is the 5-minute chart, and the S&P started out fine, had some good moments, and then started falling, and Apple fell, I think, 2.5% or something. So heavy Apple influence in the S&P. So at the bottom, I was looking at a target of 3008 because of what I learned yesterday, and I'll show you a chart later. So whatever they're saying on TV, whatever the experts telling you, whatever your heart's telling you, oh my God, you're panicking. Down here, do you panic out of your position? No. If I'm still long, this is not the place to get out, and I'll tell you why. Let's mark it up. It's easier to speak to it than just try to say it. All right, so if I'm here and I see it falling, and I'm asking myself, is this a place I exit? Whatever this is. This happens to be the S&P futures, but whatever this is, it can be anything. This is not a place to exit. Why? Because I have proven support. So this is proven support until it's not, just like this was until it wasn't, right? So the same thing I'm saying here could have applied here and against this and that. So this is not a place. And then they bounce. Okay, so now when it comes, I say, oh, good thing, right? And then the people that, again, they proved me right. And people, as we get this candle, if this was a headline, these are pretty strong candles. It gets to here, and then if you're not long and you see these, you go, oh my gosh, I need to chase it, because that's the fear, the FOMO, the fear of missing out. We all have it. I have it. And I have to look at the charts and say, should I chase it here? Heck no. Why? Because I look left. This is a ledge. So it's a scene of a crime, so to speak. And I bet you if I go to a minute chart, it'll be even more pronounced. So this is not a place to see it break out. Plus the control. So to me, it would be, I would need to see it close above this candle right there in order to say, okay, maybe I can chase it higher. That didn't happen. So those who chased it, then they see this happen, then they panic out here. So then if it fell to here, that's not the place I panic out. Because yesterday's action, this was the value area low. What does that mean? Okay, let's assume this was yesterday's action. This was the high, this was the low, and there was a point of control somewhere in the middle. I'm going to guess it was somewhere a little bit where that green line is, kind of, in relation. Forget these don't apply, okay, to this comment here. So there's always a high, always a low in every day, and then there's something called the point of control. This is volume profile study right here, which means that this is where most of the action happened, which also can be reworded as this is where bulls and bears fought it the hardest, where they kind of agreed the most, like, no, I'm to buy, no, it's to sell. So it's significant. That's why I would look at these levels as support and resistance. So if prices are falling into it, I don't bail out of it until I see that fail. Rarely do they do this through significant levels like value area high or low. So chances are they do this, and then they fail if they want to, or they bounce off of it. And that's what's happening right here. They hit yesterday's value area low. So whoever fought over it yesterday is going to fight over it again. So that creates congestion. So that is support. It slows down whatever is happening. It's the brakes. Because here, sellers, and then it hits that level. The buyers from yesterday wake up and say, wait a minute, I fought over it yesterday at that level. I made some money. I better retrigger, buy, sell, buy, sell, buy, sell. Stall. They get the chance to bounce. So do I chase it here? No. Why? Same reason as here, because this was the prior ledge. So this is not a place to start. Onus is on the bulls. They're not going to plow through it. Is to get up and use it as floor before they do that. So I would rather chase it when they close and prove to me that they can retake it. Okay? So speaking to this particular effort right here, if I'm in the market right now, I would tell myself, I'm not going to go long, add long until 314-ish. It's a moving target. I want to see basically a break above this, some consolidation and some higher lows to know, okay, they've troughed and they're going up higher. Apple played a big role in this. And let's see. Apple was a scary move today. Headline, I can't believe smart people fall for this. Goldman Sachs. It's a shameful number. But hey, Apple has had some pretty nice gains. So market makers were caught wrong, and they don't like to be wrong forever. So they have to transfer the losses from one person to another. This was unexpected. So this has to happen for the market makers to get their money back. Otherwise, they're losing money. So the suckers that bought it up here, I'm sorry for saying that, the people that fell for the fake out up here were just hoping for higher prices. This is not the place to chase it. So let me see if I can go out and prove to you why not. Okay, so I'm going to erase all the drawing the lines. No, that doesn't make it. I just want you to see that there are candles up here. Maybe if I, weekly maybe? Okay. All right, this is better. So I'm going to take out all the lines just to eliminate all the noise. So if I want to apply the same logic as to, I have to look left to see the prior action. This is a weekly chart on Apple. Still a bullish chart, by the way. So this was yesterday, or today? Yesterday's high. It was very tempting to see it that it's going to 230, 35, 50 even. But I look left. And this is exactly like here. First of all, this is a very indecisive candle and a whole series of candles that topped out at about the same level. And it's also close to this one. So this whole area is not a place to start longs until this is a prior accident scene. Last Christmas, the crash into Christmas. Bad sentiment. We took our time to erase it, which is good. And this extension should go higher. I'm going to erase it right now. And this is not a place to start long until they go above it, do this and that. So I'd rather, onus is on the bulls, believe it or not, even on a strong day like this, to get above, prove that they can use it as support. So have a few days here and then go back above it. And these are weekly candles, but this applies to any time frame. We just did the same thing on a 15-minute time frame or a 5-minute time frame in the S&P. So right here, Apple, I literally posted the actual levels to watch, and I said if this is lost, that's lost, and if that's lost, I think 21-ish was the numbers I posted yesterday, then it goes to 217. And this was 217, like maybe missed it by 4 cents. And I said right here on the double bang on 217, I'm trying longs, and I bought longs for Apple for October. They immediately turned into a 30% profit. Unfortunately, I had a partial fill, so I got screwed out of some money, but I'm not going to complain about a 25, 30% win in minutes. And these are the candles I followed. I wasn't lucky, and I'm not a genius. I just used common sense and proper level control. So here's what I'm looking at. This level is important because A, it fills the gap from which we had a surprise. And yes, this is a frothy candle, but it's kind of supported with this funky job right here. So it was good enough for me, that it was on my radar from yesterday, and I was willing to take a little bit more to exit out of this whole candle, which was what, 215, to say, okay, I'm long October calls, so I have a few days, and with a short leash. So if I'm proven wrong and my levels break apart, then I would be okay, I lost and I'll get out of it. But right now, I'm going into a potentially bullish week with the Fed, long Apple with profits, or I can just book it and go to sleep nicely over a long Friday 13th weekend. So is this a place to start long in Apple? No. Why? Because they just failed right here. This was an accident scene. And look how significant it is from prior. Now this is 15 minutes every candle. And this orange line, remember I said point of control? This is the point of control for this period of time. So let's talk to that. This is the second lesson on the same concept, volume profile. If you don't know what that is, get help on it, because it's really the most important thing on the chart in my opinion. I would never let it go. So this area here, based on this time frame right here, is where the action has really happened. This is the value area. This is where market has seen value in Apple. That's where they want to fight it. Tick, 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 all inside of that. Yeah, there are some above, some below, but the meaningful area mathematically is here. This orange line is where it's the most busy. It's the point of control. It's point of interest. So just like it is support on the way down, it's resistance on the way up. So on the way up, they should hit it. It's a zone. They come down. They hit it again maybe. They go above it. And then if I see this, then I chase it. So if I'm not long Apple here, this is not where I go in. This is where I exit if I'm day trading Apple. I got in here. I got 25%. This is where I say, thank you. I'm out. I'll reload above it. I did this today with bonds. I booked some profits and I said I'll reload. In fact, this week I should say. I was short bonds. They fell to my target. I said I'm out. And yesterday I said I will reload as soon as ZB, which is the futures contract, loses 160.04, and it did. And I was like, I'm back. I shared again. I'm short TLT, and it more than doubled overnight. It was a double win. So this is same concept repeating itself on different time frames, different tickers. This is the S&P. We're talking about bonds. Apple. This is Apple. We started with the S&P. I just mentioned bonds, silver, gold, all the same. I'm short all three: silver, gold, and bonds. And silver has been the toughest, but now it's paying the most. Gold paid a lot. Bonds paid a lot. So I'm staying short, but I trimmed a lot. But the concept is the same. Don't get suckered into the headline. The headlines are there to transfer the wealth, the losses from market makers to our hands, us, the retail. Don't fall for it. They mean nothing. The price action is going to unfold itself the way it's going to unfold itself. What the headline does is just expedites it and maybe exaggerates it a little bit. So regardless of what the headlines say, what's going to happen is going to happen. So silver, where are we here? Okay, I can't tell much from this chart. I need more time frame. So, all right. So is this a place where I start shorting silver? Probably not, but I am short and I'm not getting out. I shorted silver right here and it was perfect, except I lost money because it crashed in a flash crash, got to my target, which was 15.5, and then flipped. So I didn't get a chance to monetize it and I lost money. I reshorted it up here and now I'm whole again, but it's pissed me off the whole way because it was that thing just erased my loan. So do I start shorting here? No, because this is a pivot point. I see them fighting over it here. Plus, this is where the bears have to really fight over it, or they give complete control even on the daily chart to the sellers, the bulls I meant. The bulls of silver are still in control, believe it or not, based on this one. But if I go to shorter time frames, they're not. So this zone here should be support. Now you can see it is for silver. So I don't start shorting silver here. I can ride my short. I'm not adding to it. I would press it if not for the stinking candle. Otherwise, I'd say they're coming down to the point of interest. See that orange line? So this is the value area. It just got into the value area after falling from here. All this is, if you know the bell curve, this is unusual, like 3 sigmas or 2 sigmas. So 2 standard deviations out. That doesn't make sense. If I add, best fit line, I forgot what they call it, regression line right here, you'll see that this was way out there. All right, reverting to the mean. All right, a little longer video, but I think it's really important. One concept throughout this whole thing and the side lesson on volume profile. One concept. You have to know the levels, where to get in, where not to get out, where not to chase, regardless of the headlines. Forget it. It's fake news. Whatever headlines come out. Like yesterday, there was a fake news deal headline. So Bloomberg. Okay. I bet you Bloomberg has a trading desk somewhere and somebody made a ton of money. They came out with a headline, sources say, the White House is working on a mini deal with China. It was complete bullshit. Whoops. Complete bull. So but they made their money. I doubt the SEC is going after them. So somebody made their money on a fake headline. But Lighthizer told us that don't listen to anybody, only 3 voices count, and Bloomberg was not one of them. So if you fell for it yesterday, I booked profit on the spike yesterday. Like, oh, thank you. I was long already based on levels, but I didn't chase it. So anyway, Nick signing out. If you have any questions, subscribe to the YouTube channel. It's free. And if you need to learn about this stuff, email me. We can do some classes.